Welcome to datacenterHawk's Q2 2023 Data Center Market Recap on LinkedIn. I'm Mike Netzer, joined as always by David Liggett. David, great to have you here today.
Hello, Michael.
Yes, I almost feel like a broken record saying it's a really exciting time to be in the space, but it is a very exciting time to see in the space, as you all will see shortly. Before we get started real quickly, datacenterHawk is a research platform for the data center market real estate, trying to help you make the best decisions in the space, no matter who you are, no matter what point of your journey in the data center space you're on, whether you're a newly founded operator or an investor or you've got a global portfolio. We're trying to help you make better decisions across the life cycle of data center real estate. We've got our team standing by in the chat, so if you have any questions on any of the topics we're covering, you can chat with them and they'll can provide some more commentary. As well, you can book time with our team using the link below. We're trying to help you make the best decisions in the space, so reach out if you want to. Also, datacenterHawk.com for more information. All right, David. So as we looked last quarter, talking about Q1, a couple things we called out. Demand remains high despite delivery challenges. Price escalating, prices going up. Mixed kind of demand from the enterprise sector with some kind of subgroups within that growing, some slowing down. We talked about the potential impact of AI in the space. And then, your thoughts on the second half of the year would be strong, despite maybe a very, very slight slowdown in the first half of the year. So that kind of sets the table for Q2. Let's talk about some of the trends that you saw kind of emerge or some of the big stories you saw come out of Q2.
Yeah. I think probably the biggest is maybe the second half of the year got here a little faster than we thought. There's a number of, even when demand maybe slows a bit or is more measured, there's still, a number of large transactions that are being worked on. So it's really a question of when these actually get across the finish line. And so, I think one thing globally during the second quarter is we saw a number of those happen. And, not just in the U.S., but in Europe and APAC and even Latin America. And so I'm really encouraged that there's still such a strong demand appetite out there, even despite in our space, like the headwinds that we see related to supply, getting power to sites, being able to get enough real estate, from a site perspective to handle the power. So from that point, I think it's a strong sign for our industry that the demand is here, and I don't see it going anywhere. Just given the conversations we're having.
But to your point, a number of those deals did get across the finish line, and we saw Q2 was the largest quarter of absorption we've ever measured. Almost double, 80% increase from Q1. Again, I think that was a little bit unexpected, but to your point, the demand persists. But it's changing a little bit. So talk about how you've seen really the impact of AI on the space and how we've seen that continue to drive demand ever higher.
I think that the industry is really still building the framework around AI. Like, how do we handle these big demands or these big requirements? Where do they go geographically? For instance, the latency with some of these large requirements is a bit different than the way cloud service providers have needed their availability zones to work over time. Tax incentives, I think, will continue to be a really important part of the conversation with these AI deals. A number of these companies are actually paying in advance because they're newly formed entities. And although I think the industry believes that AI is here to stay and will be a really big part of businesses and consumers moving forward and just their not only business practices but daily lives, there is a risk to doing these large projects with newly formed companies. So some of these companies are going, hey, we'll de-risk that investment for you by paying some of this either rent or costs to build these projects in advance. So
which I think is a really smart move by those groups, because I think there's probably a lot of operators that are a little burned by the crypto with some of those companies maybe signing a commitment and then backing out, and there's nothing to hold them to.
That's right.
But I would say real quick, two interesting data points around AI that I picked up. One was the CEO of NVIDIA said he thought the next 10 years would be transformational for the data center space as they go from what he called traditional computing into accelerated computing. And I think if anyone's got an insight on that piece, he would be one. The other one was a podcast with the CEO of CoreWeave, which is a company we've seen mentioned as a group with pretty large requirements out there. And he mentioned, that when you're building an AI product or platform, when you're in that training phase, which I think we've all become pretty familiar with now, it takes about 10,000, GPUs to train an AI product. But then said once you deploy it and it's in what's called the inference stage, it can utilize up to 1 million GPUs. And so if you think of that scale, that potential scale, 1,000x growth on what we're currently seeing as the models are kind of in this training phase, I mean, that demand could be astronomical.
Yeah.
And again, with a grain of salt, but potential demand is way higher than we're even seeing today.
Yeah, I think we've said this, or I've said this before on a couple of different podcasts we've done or things we've talked at. This is one of the first technologies that has been spoken about for so long that I feel like has some real teeth behind it related to what it is today and what it could be in the future. I almost think there's going to be a new type of data center demand segment invented, like almost hyperscale. That's not, I hate even saying that because it sounds kind of dumb, but the reality is that 10 years ago, we were looking at 20-acre campuses doing 30 megawatts. 5 years ago, we were looking at 50-acre campuses doing 100 megawatts. Then it shifted to 200 to 300-acre campuses doing 400 to 500 megawatts. I think we're going to see, gigawatt-type campuses down the road, and this presents a really exciting opportunity, but also a significant logistical challenge in how do you do that. And I think you've got a number of data center operators and investors in the space today trying to figure that out. And I think, if anything, over the last 10 years, we've seen the space evolve. And for some of these requirements, if they are what we've been told, you'll have to figure out how to do that in order to solve them.
Yeah, I mean, again, it's fascinating from a technology standpoint, and then how to solve that from a real estate, from a power standpoint. Let's talk about the power specifically. I think you mentioned a comment that you heard, which I thought was interesting. Is whoever has the power has the power. So unpack that a little bit and talk about how those pricing dynamics or power dynamics continue to evolve.
Yeah, when we saw some of the power challenges in Northern Virginia, I think everybody scratched their head a bit and said, "Hey, there's an issue here." And it was a very public issue in Northern Virginia. The reality was that issue was happening in other places as well, and it continues. And it can't be solved anytime soon because these power challenges take a long time to figure out, number one, how to solve them, number two, to actually build the transmission lines, deliver the power needed to do that, to solve the demand for today and a couple of years from now. So that issue won't go away anytime soon. In fact, it's pushing demand to some other markets that, because of that, now these other markets have some power challenges, and we can talk about that in a minute because I think we've got some good examples of that. But if you think about the time it takes to make transformers, these are not just your small or medium-sized transformers. These are very large transformers that are needed to produce the electricity or at these campuses, and because of that, you're just limited in what you can do and build over time. Plus, the way that the geography is changing within these markets, we're seeing the development push to places it has not been before, and so that's creating some different challenges with power delivery as well. So, I think if anything, it speaks to the need for more mature power grids, more mature electrical infrastructure to solve these challenges, and it's creating, I think, some development opportunities on site for data center operators to try and solve the needs faster, and that's really the key right now. If you have the power and you have the site to accommodate that, and you can deliver it in a relatively quick amount of time, you can be successful. And that, I'm not trying to, there's certainly a lot more to it than that. But at this stage, where we are right now in our industry, there is, in my opinion, no market where, there's ample amounts of power that can be used.
Yeah. There's no silver bullet solution here.
That's right.
It was interesting. I was visiting my brother a couple weeks ago, and he does like multifamily development up in Illinois. Shout out Young America Realty, and they were building this apartment complex. And
I'm sure they're
the
listening.
way they do it is it's a lot of student housing, so the timing is really critical. But they had this one little like electrical box that they couldn't get. And it was going to be like a 6-month delay. He's like, we can't delay this 6 months. We have people moving in. I mean, he scoured his network, finally found one, like a replacement that would fit the specs in Texas. But it was going to be a 6-month delay for one little box. And then we're talking data centers that have thousands of components like this. And it just, it really drove home, some of the things we talk about supply chain is like, it really put some meat on that argument. And how hard it is. So,
and there's other real estate asset classes that are really competing now with the data center space. Probably the industrial market is the number one space, and really it's because those type of sites would traditionally, data centers would traditionally look at those type of sites as sites that could make sense for a data center development. And one thing we've seen about the industrial space is those developers typically move faster than the data center developers, just because of it's a lot less capital going into those type of requirements. So there's most likely less due diligence, and that has created, because that market has grown as much as it has, it's created some real issues with having the site and power to build in areas that traditionally have housed a lot of data center growth. A good example of that, if you're in Phoenix and you drive into Mesa, Elliott Road, that's the road that splits all the major development that's going on there with hyperscale users and data center operators. There are industrial developments all over the place. And from the information that we're getting, as many of those are like already pre-leased, and there's no there right now. There's not really a fear of overbuilding there because they've seen so much activity on the industrial side. So you put all that together, and it is an exciting time in the space. It's also a very challenging time in the space.
So when you talk about the record demand we're seeing, coupled with challenges on delivery, supply chain, power procurement, et cetera, how is that impacting or continue to impact price? And we've talked about it going up, but is that going to escalate? And then is it changing, I think, the types of deals or the agreements that companies are entering to? Yeah,
I mean, we've talked about this before, but 10 to 15 years ago in the space, there was really one way to build data centers, to charge data center rents, to put deals together, and the data center community was pushing the users to accept this type of agreement. And over time, the data center operator community has become much more flexible at figuring
out. And by that you mean build a data center, lease the data center on a turnkey basis.
Yes, absolutely. And so now we've seen, especially as the requirements have gotten larger, it's just a different user. They have different expectations. There's sometimes there's ownership options that these companies want. They want to be they want to have the opportunity to control the operating expenses. They want the opportunity to leverage their buying power, in part of the process to make sure they get the best deal possible. So it is creating some different types of structures of agreements that these groups are doing, and it's almost like if you think the turnkey model, there's basically like a triple net model of that allows the user to control the expenses. There's now a yield on cost model. That's not this isn't like
we've
something.
Heard that term before, almost like when we hear the term open book deals, where the operators are kind of sharing their costs and the users basically giving them a certain return.
This is very common in the office, market where the end user wants to do this type of deal with the data center operator, and so we're seeing some data center operators being willing to enter into an agreement like that. But I think that just shows you that if you want to work with these companies, you really got to be flexible on what you put out there. And then the second thing is, just from a pricing standpoint, I mean, it is rising. It's rising because costs are rising. Those are being passed on to the end user, and there's less supply. And we're starting to see, if you are looking for 200 megawatts in a market, there's only a couple places that can happen. And the data center operators are aware of that. And so I think they're, beginning to reasonably raise their price. I don't think anyone's getting gouged at all.
It's not gouging.
Not at all. It's just the way the market works. The rates went so far the other way when there's plenty of supply that it's we're starting to see that go back up. And I think that's pretty normal. That's a healthy market.
I think it's appropriate, and it's something that we've talked about in the past, that would probably come eventually. And again, like to your point, it's happening, maybe slowly, but it is happening.
Yep.
All right, let's talk a little bit about North America.
Let's do it.
Again, very, very strong Q2. So
Yep.
we measured, if you look at top 10 markets, primary markets, 755 megawatts of absorption versus 391 in Q1. So almost double.
Yep.
Again, huge demand. We talked about partly what's driving that. But talk about a couple of the markets that you saw either surprise you or that were kind of noteworthy in Q2.
So a couple of them that I would mention. Number one is Atlanta. If you go back podcasts or LinkedIn Lives, our conversation, I mean, we talked about probably 2 or 3 times ago that Atlanta would be a market that really starts to grow. In fact, I was talking to somebody the other day, and their comment was Atlanta is really growing up. That was the comment about the growth that's happened and the interest there. So a lot of demand in this market. Think there will be a lot more. Starting to hear that power is becoming an issue here because of large takedowns. We've had several developers that have been building sites there that have been fully pre-leased, and so this is something that if the investors and the providers out there, you think about, hey, we need to build a pipeline in this market with 50 megawatts so that we can solve demand for 5 to 10 years, and that gets taken day one. And those are the type of things that we're seeing in areas like Atlanta and other places. And so it creates it's like a blessing and a curse. I would say like the pre-lease is the blessing and the curse, like the blessing that you got it done, the curse you don't have anything else to lease. Yeah, and so if you think about it now with Northern Virginia being, still working out some power challenges, there's other places that you can do, you can build there. And then if you think in Atlanta starting to be more full than it's been, if you're looking at the East Coast, now it pushes you to go, hey, where's some other places on the East Coast that we could, build areas like Charlotte, Raleigh, Richmond is becoming more interesting. So, that's a really fascinating thing to watch. Phoenix continues to see a lot of demand, and there's reasons for that. Over the last several years, we've seen significant purchasing of sites to, accommodate the demand moving forward. And that's really, if you think about, Phoenix, it's, in areas like Mesa, it's in areas like Goodyear, areas like Glendale, starting to see Avondale become more interesting. So that's another market that's, really been growing. And then there's just strong demand everywhere. And it's not always crossing the finish line every quarter. Our space is very lumpy. We talk about this. Sometimes you'll see 300 megawatts of demand in one quarter. The next quarter you'll see 800. That's just how our market goes. And if you look at the big picture, that's the consistent theme. And I really think that at this point, it feels like 2023 will be stronger than 2022.
Yeah, it almost feels like, I'm thinking of it like when you pop popcorn and you put it in the microwave. It's like pop, pop, and then at some point it's pop, 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 pop. That's kind of what feels like is going on. Like markets, again, we saw strong demand in some secondary markets as well, where it's accelerating.
Yeah, sure.
Lumpy is still accurate, but it is accelerating and to the point that we're at with record demand.
Yeah, and it's one of the reasons, like you mentioned, in the secondary markets, areas like Houston, Quincy, Portland continues to grow. I mean, where the power is, these companies are interested in growing, and I think too we're seeing a number of it's always interesting if you track how the demand is changing and where the demand is coming from, what segments of the space. And in certain places, enterprise demand actually is strong. And so we're seeing, 1 to 4 megawatt requirements more active than we've seen in the past. And that has to go somewhere. And so secondary markets are, I think, open to that type of growth, as well as growth from the AI companies and cloud service providers. So you put that all together, and at some point that demand has to move to other places if it can't get solved in the major markets.
Yeah, talking about the AI demand for a minute, what do you see as like the size of that demand, the kind of number of companies, number of mixed companies that are doing it, and is it geographically centered anywhere?
Yeah, I haven't seen it geographically centered yet, meaning it's going in all markets. But I think I think a good benchmark is probably like 5 to 10 megawatts. But we've seen some of those groups that have Like there's a couple of AI companies that have literally 100 plus megawatt requirements that will be solved in maybe multiple markets, but they're going, hey, if we can put 30 megawatts here, we will. If we can put 20 here, we will. And if we can put 40 here, we will. That's a very real use case. And so, they might be so there's kind of like a large and a medium size, within the AI companies. And I don't see that stopping anytime soon. I mean, they are here, they are well capitalized, and they are taking down space.
And it's worth noting that the large hyperscale, cloud service providers are making big investments in AI as well. All those groups have announced significant investment in AI in response to their customers, asking for it from them. So, just one, note on North America, but we're tracking basically 2,300 megawatts of under construction capacity by those hyperscale users. So they're continuing to grow, as well as significant amounts of leasing. They're still, I would say, staying the course with building about as much as they can.
Sure.
All right, let's pivot over to Europe. Again, a very strong quarter there, not to the same degree. We saw, kind of look at across the FLAP-D markets, what we consider primary markets in Europe. About 130 megawatts of demand in Q2 versus 114 in Q1. So again, not the 2x we saw in North America, but strong. And I think the real story is in the secondary market, which basically we saw, 110 megawatts in the first half of the year versus 40 megawatts in the second half of last year. So that's one market. When we've talked about this, ad nauseum on this podcast, that those markets will continue to be more interesting for various reasons. But just talk a little bit about what's driving some of that demand to the secondary markets, and then what do you see maybe going forward? Do you think this will continue?
Yeah, one of the reasons that there's sometimes a longer timeline on some of the European developments that are taking place is, related to the regulatory environment there. It's this is my opinion, but certainly there's a much stronger focus on sustainability and how to really utilize energy and put it back into the community in a positive way that doesn't always happen in the U.S. or isn't to that level yet. So because of that, there's longer timelines, and I think that's why you see maybe smaller demand numbers, but the demand is there. I mean, if you look at areas like London, your traditional development locations are tapped full of power, so it's pushing things, into these secondary areas within a market like, London or even like a Frankfurt. If you have access to power, there are companies that will take it, and if you don't, they're looking at 3-4 years ahead. And so from a big market perspective, I don't see a time that interest in those places will change. But I think because you have a different certainly with different countries where they are, the physical locations, but also the way some of those regulations are changing, that pushes some bigger demand to smaller markets. And that's what we're, seeing. There's a number of data center operators that are, started in Europe and will continue to grow just within the European markets that are there. And there's also, investors from areas like the U.S. that have either bought companies or bought land in those markets to grow. And once you have a relationship with a customer in, APAC or Europe or the U.S., and you can replicate that in a different place, I think there's a conversation to be had there with the larger users. And that's why areas like, Madrid and Milan and the Nordics are really interesting right now for the larger demand. I mean, you have to look at how much energy can be provided over, the next 5 to 10 years, what the sources of those energy types are, and then figure out what can, realistically be done with the real estate side of things and getting the power to those places. And that's really the story in Europe right now. I mean, there's so much interest. It's hard to even quantify. I
heard a comment from an operator talking about some market in North America. It might have been Northwest with kind of the renewable story there. And a guy mentioned, he's like, yeah, but it's not the Nordics.
Sure.
And I think that just underscores the real attractiveness of that nature of that region with, kind of a good story around cooling, a good story around power. And so I think we'll definitely keep an eye on that as a kind of sub-market of Europe that we think will grow pretty significantly.
100%. Yeah, and a lot of those, I think you have a much more maybe interested, I think the communities in these countries are, certainly more interested in how these developments take place. And, I think there's some areas in the U.S. that we're starting to see become interested and as interested as some of those areas. So, some of the timelines, I think, and development areas, in the U.S. will be determined similarly to how things are happening in Europe, which is, whether the community wants to build in a location or not, whether a government entity believes the data center asset type makes sense to continue with in a certain geography. That's taking place in Europe, and that's starting to take place in the U.S. as well.
Yeah, and again, it kind of tying that to, again, what the hyperscale groups are doing there as, significantly leasing presence there. But, we're tracking them as maybe about 400 megawatts of construction under development currently today by those hyperscale companies in Europe. So again, there's a lot of investment going on there. Certainly not to the scale of the U.S., but material and increasing.
Yeah, they would if they could. I mean, it's not a lack of interest. It's just how do you do that in some of these places that are more challenging?
Sure. Again, I think we heard over the last several years of kind of like these American companies, they can't come and do things the way they've done them in Europe, in U.S., and that's, I think, true to an extent. But
it is.
As we have mentioned on here before, demand finds a way.
That's right.
As Jeff Goldblum. Right. All right. Now, looking over at APAC, I think a lot of the trends we've been tracking over the last several quarters continue. Singapore continues to be a challenge, and that's pushing development outside, kind of immediately north of Singapore, all the way up into the Kuala Lumpur. We looked at the Singapore market proper has only grown 8% in the last 2 years.
Yeah.
Not annualized, total.
Yeah.
Where you look at some of the other markets in APAC, and they're seeing obviously much more growth than that. But any thoughts on kind of that region? I think the government's starting to get involved in kind of parceling out space.
Yep.
They certainly see the value, of Singapore market. It's a very critical market. But where do you see that going, in the next year or two?
Well, historically, the data center requirement sizes have been very they've grown reasonably, and so what's happening is, and this is happening everywhere, it's not just in Singapore, but all of a sudden people are coming back with quadruple the size of what historically has happened, and then you have end users themselves that are asking for similar sized requirements. At some times they're actually the same requirement, but you have, I think, power companies and governments that are overwhelmed with the amount of power that will be needed to do what these companies want to do. And so they're having to get involved to figure out, hey, how do we solve this and make sure that we have power needed to allow our citizens to live and do the things they need to do. So, I think that there's a fine balance of groups being involved and figuring out who can do what, and also knowing kind of when to let the market do what it needs to do to act appropriately. But I think if you're a data center operator or investor, you've got to be willing to play the game. And then I don't mean that negatively. I just mean you got to be willing to understand how it's happening, because customers would love to grow in Singapore. They just can't right now. It's one of the reasons that the pricing there is ridiculously hh.
Yeah, it's like almost 2x.
You're talking
regions.
$500, $600, a kW. This is, a totally different price point here than compared to other places.
Yeah, and if you contrast that with like a Sydney market, over the same period last 2 years, has grown 44%, versus Singapore's 8%. Yep. So that's a market that, continues to grow, continues to see investment. And some of that's driven by some of the regulatory environment there.
Yeah, sure.
But, there's other markets kind of across Asia. Again, Asia is such a big region, it's almost hard to summarize it, but you kind of have like India, you kind of have Northeast Asia, you kind of have Southeast Asia, and you almost have like Australia and New Zealand as separate groups. But what we are seeing is hyperscale companies developing across the whole region, including all those sub-regions I just mentioned.
Yeah.
So we certainly see the interest. If you look across the whole region, it's about 600 megawatts of development that's currently under construction. So
and you'll see
all the positive indicators are there.
Yeah, and the AI growth will happen there. It's, I always say like the U.S. is typically 2 to 3 years ahead of stuff that's happening in the U.S., other places in the market, and that's probably even a smaller timeline, just given how mature the space, the industry is becoming. So, not that we needed more interest in those regions. But, with the way the supply is right now and with the demand being heightened in areas like this, if you're looking for areas to invest, to find land to build, APAC and Europe are like, middle of the fairway. I mean, these are places that should be focused on, figure out how to get capital to these regions because the growth is there today and will continue for a while. Yeah,
it bears repeating anecdote you shared maybe last quarter, the quarter before, where people are asking about, well, hey, where are the next markets in the U.S.? And the comment was, the next market in the U.S. is Asia.
Yeah.
And figuring that out, there's a ton of untapped demand there that once it gets figured out, it's going to be pretty amazing. Okay, so now we're going to bring in our Latin America Regional Director, Steve Sasse. Steve has been working very hard to build out our LATAM data set, which we released with our Q2 2023 release. So Steve, welcome to LinkedIn Live. I'd love to hear some of your thoughts on the LATAM region.
Hey, Mike. Hey, David. How are you?
Great.
Excellent.
So LATAM, I think we're just following up from the last quarter. It's been tremendous growth the last year, I would say, and what's interesting is the numbers we just released are validates the message that we've been saying about these markets, right? Especially the top 5 markets. But the numbers are showing us that overall the LATAM market has 680 to 700 megawatts of available commissioned power. Of that capacity, 505 megawatts sort of in that range are made up by the top 5 markets. And when I say the top 5 markets, I mean Querétaro, Santiago, Bogota, Sao Paulo, and Mexico City. So let's say that's 74% of the capacity in the region. And of that 505 megawatts, 251 megawatts are in Sao Paulo, obviously the biggest market in the region. And it's just interesting fact of Q2 as we saw a little shifting in the order of markets. We saw Querétaro surpass Santiago, go from number 3 to number 2, just slightly. I think by less than a half a megawatt, but Querétaro did surpass Santiago. That's in the Q2. On the absorption front, we saw a big jump from Q1 to Q2. I think last year, I wouldn't say it was slow, but we didn't see the numbers jump up as much as we saw between Q1 and Q2. Last year, we were seeing an absorption in those 5 markets between 12 and 15 megawatts, where in Q2, we saw an absorption of about 86 megawatts in those 5 markets. Of that 86 megawatts, a lot of that absorption happened in Querétaro with 45 megawatts, mostly due to some pre-leases and some capacity that was under construction and was immediately taken up by some of the largest customers.
So I don't want to assume, but I do expect that a lot of that demand is driven by hyperscale companies. But are there other unique demand drivers in that LATAM region beyond just the hyperscale demand?
Yeah, I mean, we're beyond the hyperscale. You have to also realize that obviously the LATAM is a few years behind the US, but the enterprise market, the financial markets are all now connected to the cloud post-COVID digital transformation. So we're seeing some large enterprise taking some larger deployments in some of these facilities. So there is a market there beyond the hyperscalers.
Yeah, and so then where do you see, you've come looking forward a little bit, where do you see the demand continue to spread out, or companies that are announcing planned facilities, or there's kind of growth on the horizon for kind of the next year to 2 years?
So we're seeing a lot of construction activity in Querétaro today. Providers like Kio, Equinix, Layer 9, Ascenti, Odata, Microsoft, and Amazon are all building facilities as we speak. But the planned capacity that we're seeing in our numbers, we're seeing some pretty large growth in Querétaro, about a 5x number in Querétaro in the coming years. Also seeing Bogota with a 4x planned capacity number. That number in Bogota is a little bit, all that number has been announced. It's just that we're not seeing the construction activity today in Bogota as we're seeing in Querétaro. I think partly to do, what I've heard from some of the providers is that some of the hyperscale growth in Bogota has been kind of taking a backseat to Querétaro. They're trying to finalize their plans and their facilities in Querétaro before they move on to Bogota.
Yeah, you look at that Bogota being a bit of a smaller market, but there's certainly interest there as well. When you kind of look at the broader view of like vacancy rates coming down, is that having an impact on pricing across the region?
I mean, the pricing, every market obviously is different. You have to take into consideration inflation, currency rate valuation, so forth. But I think the rates, as we've seen in the rest of the world, took a slight bump up last year. So the rates went up. Right now, some of these larger markets, especially the ones that are building a lot of hyperscale facilities, we're seeing the rates stabilize. As more space becomes more available, the rates are stabilizing. Bogota, for example, doubled its inventory between Q1 and Q2. Some new facilities are coming online. Equinix turned up BG2, which is a facility that it's been under construction for a couple of years. Kio just turned up some capacity in their new site, Bog1 in Bogota. So what we're going to see, those are more on the retail side, but in Bogota, we're probably going to see some rates stabilize once the hyperscale construction starts.
Yeah, and are there similar challenges in LATAM around the power procurement side, or how is that unique in LATAM across those markets? And does it vary by market?
It varies by market. Some local governments have been a little bit more proactive in trying to secure that because obviously they want to drive this demand, they want to drive this investment. For what I've heard, some of the customers, Querétaro has been, there are some issues in Querétaro. The local government is trying to build out some facilities, build out some more transmission lines, but I think every market is going to be different. In Bogota, you have the Zona Francas, which they also work with the providers in trying to get the capacity that's required for the data centers. So every market is a little bit different. As far as power constraints, I wouldn't say any market today has any power constraints. What we are seeing in Querétaro is people announcing new facilities further and further out from downtown Querétaro, because then you can go into another state and get other facilities other transmission lines to connect to your facility.
Yeah, and that sounds like a similar trend to what we see in U.S. with kind of that sub-market expansion. You have anything, David?
Yeah, and I think to Steve's point related to the power. The developments moving from a power perspective, I think that we will see end users and really investors and data center operators do a lot more due diligence around power procurement in all these markets, because you really have to know what you can deliver day one, what can be delivered at the site, what is firmly committed. There's a lot of groups historically that have run around saying, hey, we've got 50 megawatts here, we've got 100 megawatts here. And I think, now where the market is in areas like Latin America and areas like the, US, Europe, you have to really know what that power commitment is so that, the end user doesn't get, left with no project because the power company can't deliver.
Yeah, and on top of that, David, there is some. I would say that in Querétaro today, I said there are no constraints as far as power from the government's perspective, but there are constraints as far as technology park capacity, right? So a provider will go in there, will buy a plot of land inside a technology park. Now the technology park, they have to deliver the power to the facility, right, inside the park. And there's been some issues with some providers where the technology park has promised them the capacity, and the capacity is not there day one. So there's some internal capacity, not just in the transmission lines to the technology park, but inside the technology park.
Yeah, well, Steve, we really appreciate all the hard work you've done over the last several months gathering that data. You can always go to datacenterhawk.com and check out our LATAM coverage. Steve, again, thanks for joining us. Thanks again, everyone, for joining us on our Q2 2023 Data Center Market Recap. We've created a link for the Q3 LinkedIn event below, so you join there now so you don't forget, and we'll see you next time.